Thank you, Mohammed Ali Yasin, for being here with us today. How would you describe your initial reaction to the UAE upgrade to emerging market status?
I think initially it's a relief that this chapter has been resolved in a positive way. I think the markets have been attempting to be part of that index for five years now, and I think the fact that it has happened in a year like 2013, where the markets have recovered, I think it's a good relief. And I think although we sometimes criticize or the regulators or the markets for not doing enough, I think we should commend them on the efforts that have been done so far to get us into that in that positive conclusion.
How do you think, we got here? Has there been a series of developments that the UAE has done to assure institutional investors that they should invest in the UAE?
Indeed, they have. I believe that we've done this few years back, actually. But I think today, what really has changed, the game changer in my mind, it's the liquidity of the market that we've seen that has improved or showed much better signs of improvement since about 4 or 5 years back. The markets today have traded nearly over than 76 billion, which is more than what markets traded all of last year. And therefore, that shows that we're probably going to be hitting the 120, 140 billion this year. Now, the other issues they've talked about the DVP process and improvements there, I think those were just cosmetics in my mind. But I think it's the liquidity that has actually made the international institutions demand for the UAE to be in the markets.
How would you say the reaction has been among the financial community last night?
Yeah, I think everybody is relieved that this is passed. It's the issue now is how will that reflect on the markets. I think the worry is this: if it wasn't positive, we could have seen a stronger negative reaction to the markets. Now I think we probably will continue into the same price range that we've seen happening for the past, let's say, 10 days.
Do you think we're going to see an increase of liquidity immediately?
I think it's the issue is that here at the quality of the international investors that we will get. We will get now the mutual fund investors rather than the hedge fund investors, which were with us since 2006. And those are the ones hopefully that come for the long term, and they look for the fundamental valuations, and they give you some stability to the market. That is where I think is the important part of being part of that index. But the question is very important because the inclusion starts in May 2014. It's going to be a slow build-up as we go along in that period. And I think that's an important point because maybe some of the retail investors will not understand that, and they may expect markets to move positively in the short term. And if they don't move positively in the short term, we get the kind of negative sentiment of why didn't this reflect? And that is, I think, the reason that could be the reason why, if the markets don't move up in a huge amount now, why it wouldn't do that.
What do you think has been the trigger or the catalyst that has ignited investor interest?
Many factors, but I think the part where we started to see the 1 billion plus regularly, and that happened in May, is I think the confidence levels in the market and its ability to continue to move positively across the year. Because what we've seen in the past 2 years, the first 4 months we have a big spike and then the market dies down.
Yeah.
That did not happen. 2, I think the distribution of public companies was excellent this year, and that gave good ammunition and good yields on the stocks. And 3, what's also important is that the interest rates have dropped so low in the local markets that the alternatives, people were looking for alternatives. Bonds, there was a fear that the yields are going down, so therefore equities look like the right place to go. And I think that is really what has helped what we see today in terms of cash coming into the market. And I believe cash still waiting on the sidelines to come into the market going forward.